we moving from, I've always called payments the fourth utility, and I've been saying that for about a decade. But actually, with embedded payments, open banking, and integrated payments, it's actually transforming payments from being a utility into a growth engine. But there's still a huge opportunity, and a lot of companies are not using it that way yet. So the market for growth, this is an area of payments where we will still see a lot of growth. I'll bring Helen up. She can introduce her panel to discuss this further in depth.
I'll just invite the panel to come up and we'll all say hello. If you all come up, guys, and we'll say hello when you're all settled. Beautifully timed for this panel, given everything we've heard this morning. So I am very, very excited to be talking to you around transforming retail transactions through integrated payments and embedded finance and open banking. Now, what I'd like to do is I will introduce myself, and I'm going to do it last because some of you already heard from me this morning. What you'll be pleased to know that Buckleby Bill is safely in his stall and there will be no bolting horses. What I would like the panel to do is to say a quick hello to get them into the swing of it and a little introduction. So, please, say hello.
Thank you, Helen. Good afternoon, everyone. Great to be here. My name is George Tumbev. I'm Chief Commercial Officer at Westboxed. I look after the growth, go-to-market, and commercial strategy of the business. My background is the intersection of technology and financial services in various guises. And my focus in recent years has been on making fintech work in big bank. It is possible, it's challenging, but there are many, many benefits. I've helped scale Metal, which is NatWest's retail business account, and looking to bring some banking as a service, embedded finance kind of viewpoints to this panel.
Superb, thank you. 3 guesses where Eamon might be from. Okay, well branded. Eamon, please say hello, and please give everybody a look at your trainers because they're also branded. Awesome.
Yeah, hi everyone. I'm Eamon from Papa John's. I come fully branded in the picture as well as on stage. Some custom Papa John's Air Force Ones. If you want to take a look, I've got a little label on there. It says Papa John's on it. So, yeah.
Running the extra mile.
Exactly. So my role at Papa John's, I'm the Senior Product Manager for Digital Tech. That's covering the whole e-com journey and all of the services around that. I joined the business 2 years ago and found that no one was really looking after payments and we were leaving money on the table. So came and put my arms around it a little bit and find myself here talking about open banking and for the future of commerce.
So a huge amount to add, as does Richard. I don't think you need any introduction, but Richard, for people that don't know you, please say hello.
Hi, I'm Richard. I'm a self-confessed payments geek, so I'm feeling quite at home here. Probably for the past 20 years, I've focused on payment innovation and payment innovation in the retail space. So I was lucky enough to lead the team at Barclays when we introduced contactless payments and then done the other manifestations of that, wearables, Apple Pay and Samsung Pay and Google Samsung Pay. And actually for the past few years, I've been working at open banking, thinking around how we bring open banking payments, how to grow that capability, and more specifically, last couple of years, really looking at VRPs and commercial VRPs, which is yet another blooming acronym. And if as an industry we can use less acronyms and more real words that mean things to people, that would be great. Quite a useful panel because dotted around that time, I've actually spent a bit of time helping investors look at investments both in payment innovations and actually embedded finance as well. So I look forward to speaking with my colleagues here.
Thank you, Richard. Phil?
Hey everyone, and I'm afraid I have invented a few acronyms, unfortunately. We had one where we were looking at our future financial services at Sainsbury's, and we accidentally had the abbreviation of FFS, and we quickly realised that shouldn't be one. Already taken. So I'm Phil. I look after payments at Sainsbury's, in-store, online, gift cards, financial services. I think today I'll be mostly thinking from a Argos or a groceries online hat in the e-commerce space.
Thank you, Phil. For those of you that weren't here this morning, my name's Helen Child. I am delighted to be with you. I'm the founder of Open Banking Excellence, OBE, Not only is it the world's largest and most engaged community, if you were here this morning, you'll realise that we've pivoted or pirouetted, as I like to say, I won't have that gag about us being a slightly more graceful again, into Ignite, which is now a advisory company. So we've gone from community to consultancy, and we advise many of the banks, the regulators around the world to help them deliver on their policy, their strategy, their delivery, to get people to get things done. So we advise banks and regulators around the world. So prior to that, a long time ago, I built an EMI, and we were the first EMI to have licenses from both MasterCard and Visa. Everybody dual issues now. When we had our e-money license, we were number 5 and Google was number 6. So I can remember Google Wallet being built by some friends of mine. So it is fascinating this morning to be hearing about agentic AI and where it's all going. So the timing of this panel being after you've heard everything this morning, I think is absolutely superb. So what I'd like to do is ask you, Phil, you represent our largest retailer, and I'd like you to set the context for this panel. And, talk to me about retail transactions, the landscape that's evolving, and why payments are becoming invisible and integrated. What are you hearing from your customers? And most importantly, what are you doing about it? And I'm going to ask each one of the panel to comment on it so we can get off to the races.
Yeah, thank you. So it's really hard to not cover all the topics that have been covered this morning because they've done a really good job of setting this scene. So in terms of the things that I'd add probably that are new or that are slightly different or just to build on that, I think affordability is at the core of our strategy within Sainsbury's, and that's not going away. Customers, their budgets are stretched further than ever before. Cost of living crisis, the economy, Trump's tariffs. There's just any number of things that are leading to budgets are very unstable. Customers don't have a lot of confidence in the market. Therefore, affordability is front of mind for customers, but also for businesses like ourselves.
Hence your new ad campaign,
Sainsbury's.
Yeah.
Exactly that. So it's we're leaning into it massively. We've done a lot of work on the value index because Sainsbury's has always been seen as a premium brand, not very good for affordability, not very good for budgets. So we've been trying to offset that. At the same time, I think there's this conversation around friction, and we've been talking about like frictionless. We see a lot of success with Apple Pay, with wallets, and the frictionless they bring. I think the one thing I'd want to give as context is we are seeing a value exchange where friction is accepted. So we are seeing customers are happy from a financial service point of view to pay more for an item, but to get cheaper monthly installments on that in a subscription-like model. Likewise, I think Richard was talking about the residual value in an item. Customers are thinking more and more like that. So when we see customers coming to buy the Switch 2 at Argos, a high propensity of them have also looked at trading in a Switch 1. So there's this, I'm going to buy a Switch 2, but I'm going to trade in my Switch 1 at the same time. Likewise, the new iPhone, for anyone who's seen that launch very recently, that's £2,000. So again, customers are starting to think, well, can I trade in for this? Can I? And so that world of continuous value and upcycling or recycling is definitely coming in.
And how are you responding before I ask Eamon to comment?
How are we responding to that?
Yeah.
So we've been working very heavily on our trade-in proposition, so our ability to do that. We're also investing a lot in those future financial services, which has a very different abbreviation. But we are looking at ways to give customers monthly costs, to give them ways to almost like lease products rather than just buying products. So the world is massively changing in this space.
It certainly is. And that's a great opportunity for you to come in, Eamon. Papa John, integrated and invisible were the two key words in my opening question. What are you doing? What are you seeing? Set the context for everybody, please.
Yeah, I think kind of really similarly to yourself, like we see that kind of cost of living going up and making it harder for people to make a decision to buy pizza, which is essentially a luxury item. It doesn't have the kind of convenient stuff that you guys offer. So that makes it really difficult. Then we're also seeing a bit of, and there's some studies out there that show that there's an anxiety when the customer hits the pay button, waiting for that decision. So you have to try and make that as kind of seamless as possible. And to go back to your words about kind of frictionless and invisible, and like how do we bring it earlier in the journey? How do we authorise payments earlier? How do we take the anxiety out of making that decision to pay and give customers a great service?
George, I'm curious, what are you hearing from your customers? What are they seeing in all these shifts? You know, set the context. There's a big shift. I said, you know, open banking's at a pivotal moment, but I think payments is at this pivotal moment, isn't it? You know, what are you seeing?
Yeah, I mean, we're on the other side of the fence, so we have the brands and the retailers who are trying to achieve their strategies, and we're really there to provide the tools and the services for them to achieve whatever strategic objective they have. And I think what we're seeing is that the imperative for embedded finance is growing in these brands, and is driven by a couple of major factors. So the first one is the evolution, clearly, in consumer behavior. So already, or we're on the cusp of the majority of the population being a digital native. They want to engage with financial services and kind of payments in a way that's very different, kind of at the point of need on a digital channel. So that means that effectively that will be in brand or in platforms going forward. I mean, as a being owned by a bank, the majority of retail banking revenue by 2030 will be away from the banking channel. So this kind of concept of embedded finance is imperative. If we look at consumers themselves, I mean, you guys probably know much better than I. Kind of, they're a lot more clued up. They're a lot better informed. They're a lot more fickle, and kind of switching costs are very, very low. So there's a challenge for retailers and brands to maintain or grow market share. And again, this is where we see embedded finance coming in supporting stickiness, cross-sell, or even opening up new revenue channels. We did some work recently, with retailers, and getting embedded finance right does increase basket size, conversion, and revenue could go up to 3 to 5%. And if you're a large retailer in the current environment, that is a substantial benefit.
3 to 5% just by getting your customer journey, the embedded finance.
Exactly, yeah, which drives clearly the cross-sell and the conversion.
That's nice if it falls to your bottom line, isn't it? Very nice. So Richard, again, context, what are the biggest shifts that you're seeing? It's a bit of a lead in. I hope the answer includes open banking.
So I think I think when we think about payments and retail, there's probably two aspects and two lenses we need to look at it. First of all is just making the experience better. So we talk about the trade-off between friction and convenience and conversion and basket size. So this is what I'm doing. How do I make that better? How do I improve that journey? And there's lots of focus and effort on that. And open banking is another payment. I believe we call it a alternative payment method that's thrown into the mix. It's not probably optimized where it needs to be, but hopefully we're getting the building blocks. So one area of focus is just improving that experience. And then I think that has to be put in the context. There's a big battle going on, and you referenced it before, that we've got, maybe at its simplistic level, it's the agent versus the brand. Because if we've got these autonomous agents going out and they're getting the best deal for me as an individual customer, they're going out and they're buying products or services, they're buying stuff. Whereas the brands are pushing back because they're trying to win their customers' loyalty and give them a solution that allows them to stay within their brand. So there's a big battle that's going on there. I do think there's going to be a shift in the way that people pay. So we no longer have single transactions, but it's a move to much more of the subscription economy. So and clearly if I get a subscription economy within a brand, that means I've got loyalty because, I know when I worked at a particular financial institution, part of it was I was never giving the best in the market, but I was giving within the top, the top quartile, so that my promise to my customers was, I'm going to do my best for you and I'm never going to rip you off. And that was sort of their customer promise. And brands are working out what's their promise that they're delivering to their customers and how do they deliver that. And I think payments is part of that because it does help embed that journey, embed that loyalty, because I know do right by me, and I know I'm less likely to get challenged, and I know they know where I live, and when things have gone wrong, they fixed it for me to the past. And I think open banking is part of that, because our payment subscription capability at the moment, it's a bit archaic. We've got direct debits that was developed 60 odd years ago, but it's fine. You no longer have to sign bits of paper to make it work. But there are challenges and problems because it was built in a world that wasn't very secure. There's lots of, to protect customers to pay back. So I think both of those areas, payments have got to change how the market's changing.
So where would you, which is fascinating hearing from all of you, so thank you, and let's really jump in now. Where are open banking payments? This morning I referenced the fact that, having advised HMRC, the biggest and the best use case, we collect billions, and it is, 13, 14 billion from self-assessment. So that's the biggest and the best use case, and the one that we all roll out, okay? But where are we really with open banking payments?
That's a tricky one, because do you want the hype answer or where we are in the reality?
It's closed room, where we are in reality, and link it to that subscription model, which is where you see the growth.
Yeah. So I think we've got the foundations and we've got the building blocks, and I think the stats are 30 million transactions a month, sort of 31, 32 million transactions a month on open banking payments. So it's there, it's existing, it's probably reached critical mass that it's self-sustaining in terms of sort of, it's a lot more than Payham got to in terms of number of transactions. People are used to it. It's normal. It's embedded in paying your taxes. It's embedded in paying off your credit cards. But actually, I think it needs to evolve and move because it's driven by regulation. So the providers of those capabilities, it's a compliance exercise. It needs to move to a more commercial footing so that there's the right incentives for all the participants to optimize, to evolve. There's that saying, what do you call something that doesn't evolve? It's extinct. And therefore, we need to give open banking payments the capability to evolve. And it's much easier to evolve under a commercial frame than a regulatory-driven one. So that's where I see it going. There's lots of possibilities. This is reflected in National Payments Vision.
You're doing to a drum beat now. Come on, Richard.
Sorry, I've got to speed up.
Come on.
So I think we've got the foundations, but we haven't quite yet built the house. And it's quite hard because we're building a house on an ecosystem that requires, it's got to reach, you've got to get that flywheel going that it's critical enough mass to move when I've got billions of billions of transactions going through cards and DDs, so they've already realized economies of scale and got those efficiencies. So there's new capabilities, but it's quite a hard battle to make sure that we allow this creature to to But I think we're building there.
And you did really well there. The banging and the drumbeat didn't send you off your stride, so well done.
Sorry, can I just jump in on a
please,
couple
jump
of points?
in. I was going to ask you a question, but go for it.
It's really interesting what you said there. So one of the reasons we added open banking as a payment option for Papa John's was just to try it and see what happens. I think it's, as you mentioned, it's well established when paying your credit card bill or when paying for utilities or your HMRC bill or whatever it is, but how does it work and how does it sit in a retail setting? So we just put it live on our web. It's not an app yet, but that's coming, and just wanted to see what happened. And what we saw was a few months of kind of 10 to 15% growth month over month until we got to about 4% of checkout, 4.5% of checkout. And then it kind of stayed in that window, and it has done for the last 3 months. So customers who want to use it are using it. The benefit from our perspective is that it's actually taken share away from PayPal. So it's taken from our most expensive payment type to our cheapest payment type. So there's a business benefit to doing it as well. We are yet to incentivize it and see what that does. But there's been a lot of chat about kind of loyalty, and that's next on our plan. But
can I pick up on something you said? Because I think there's a really interesting battle that goes on around it's customers don't want to try something and fail at it. And maybe it's a British thing, you know, you don't like to do something in public. You know, I'm at the front of the queue. We like queues, but if I'm at the front of the queue and I've done something that's not working, we certainly found that at the start with contactless, and I suspect we're at the same point. It's quite immature, and people, do they have enough confidence to try it?
Well, that's a great segue to ask George. I mean, George, in terms of brands and using it to lean into their brand strength around trust and loyalty, what separates the leaders? Because you're talking about embedding finance, so you work with some of the biggest brands in the industry. What is separating the leaders from the followers in this space?
Yeah, I mean, I probably think of it in two dimensions. One is undoubtedly commercial sustainability, because you know that's critical. And then there's customer excellence. We're kind of using this phrase "big brand plus big bank equals scale." That's not to say that smaller brands cannot be leaders in embedded finance, but clearly they'll need to achieve sufficient scale in whatever market or segment they're in. And what's key to this is that embedded finance needs to be relevant to the core strategy of the business. We've seen many examples of embedded finance projects failing because the brands or the retailer are not able to really embed them to kind of their raison d'etre. So that's kind of the commercial sustainability. And then there is the customer excellence. So at the end of the day, customer excellence trumps technical excellence. Technical excellence is ticket to the game. Any provider or any embedded finance kind of business that you speak to has amazing, modular architecture that's easy to plug in and scale. But at the end of the day, for these brands, the reputation is sacrosanct, right? If they lose the customer, they're done. So when it comes to embedded finance and banking as a service, they really need to work with partners that are able to really support their ambitions through, appropriate kind of operational and customer excellence. We did some work recently in this and kind of speaking to brands that have actually implemented or in the process of implementing embedded finance solutions. And 90% of them saw an increase in kind of customer outreach. A lot of it was not positive in terms of managing this rollout. So it's very important that this increase in inquiries and kind of this, if you like, there's another player in the value chain that needs to be managed properly. And this is where choosing your embedded finance provider is so important.
I agree. Richard, embedded finance, does open banking help or hinder to this point?
Yeah, I think it helps because open banking, there's certain things that we do in open banking that sort of establishes how you can register once and be trusted by many. So I think the trust framework is really important. Similarly, those firms, when you're embedding finances, you've got to have a trust framework to ensure that if somebody's coming into your journey, even if it still looks and feels as if I'm within the retailer brand, but I'm in the boxed environment, you've got to have that seamless transfer in and out. And I think there's certain, we've gone some of the way. Has open banking solved all of it? No, because I think sometimes the push back to the retailer is sometimes a bit poor.
It's just you and the banging, isn't it?
It's me.
Keep going.
So I think the trust framework and the ability helps, and just that whole context of it's API-driven payments, yes, but then most payments have gone that way now. They give you a plug-in to plug into your website and to embed it.
So, Eamon, you've integrated open banking. What are your customers telling you?
Yeah, it's a good question. So, like I said, we got to about 4.5% of checkout quite quickly. We are seeing customers who use open banking return around about 88%, which is massive. It's by far and away the biggest percentage of returning customers. So that kind of friction to register once and the seamless the second time is really kind of resonating with customers. I think over the next sort of 2 or 3 years, open banking is going to become an expectation on how you pay. And without jumping the gun on the agentic conversation, I think that delegated authority through your banking app or your bank account is easier than doing it via your card with all of the PSD2 and all of that kind of stuff around it.
So, Phil, what are your customers telling you? can business balance these frictional payments with the numbers that we're hearing about?
Yeah, I think so. I think it goes back to that value exchange of what's the customer getting for it.
Yeah.
So I think in a paying off my credit card, pay by bank, it's seamless, it's quick. You used to have these readers and these codes, and it definitely solves a problem there for the customer. One of the really interesting things that we found this year that really surprised us in an embedded finance world was we have a high propensity of customers going through guest checkout. I think a lot of the retailers in this room will have a guest. We saw lots of customers going through guest, but then taking out a financial service. And this is really counterintuitive because you think guest is, I'm not going to take out an account with you. I'm not going to fill out 3 fields because I want to get out quickly. But then taking out a financial service, you're like, well, now you're filling out potentially 2 or 3 pages worth of info. And so what that told us massively was customers don't value having an Argos account, but they do value spreading the cost. And so the challenge for us is how do you bring those together? And we were talking about super apps before, we were talking about loyalty, but it is very much, if I get an Argos account, is there a benefit to that? Or are you just going to spam me with marketing? If I use open banking, what's the benefit I get from that? Because I think we all nodded when you said that direct debits are 60 years old, open banking should replace that. But for a customer, it's probably 3 or 4 film fields on a website. They probably won't know if it's a direct debit or an open banking.
Which is a lovely segue then into to get the conversation to agentic AI, which is what we heard a huge amount about that this morning. So how do you think that redefines a relationship with retailers and the financial services companies and the customer? How is it all changing? What are you hearing? What are you seeing? And crucially, what is the part that open banking has to play in agentic AI and this whole new landscape we're talking about?
Is that to me first?
Yes, please.
Yes. So I guess it's coming for us. We've talked about it today. The world's changing. It's changing at a rapid rate. So we're seeing which preferred technology, for example, for agentic has changed, I think, 4 times in the last 6 weeks. There's never been a technology quite like that, I don't think. From our point of view, it's a huge threat, but it's also a huge opportunity. So I think you're going to see customers wanting to shop where they are or shortcutting behaviors. So, for example, it will be no surprise to you that people look at Pizza Hut, Domino's, and Papa John's as to who's got the best offer on right now, which pizza shall I buy. With agentic, they can go, chatbot, tell me where to get the best pizza deal right now. Or
so it is redefining that relationship between all the parts of that value chain, the retailer, the customer, the financial institution.
Exactly that. So you need a reason to go, why come to me? So I think someone was using the example of Instagram. Shopping within Instagram, it's really annoying when it sends me off to the retailer website. It is unless you're getting something for that. So if going off to the retailer website, you get an exclusive discount code, you get quick checkout. But the more that agentic solves for these things, the more that social commerce solves for these things, the more retailers are just going to have to play in that space. We might have to accept that customers shop Argos in the future through ChatGPT rather than through argos.co.uk, for example.
So I want to bring everybody else into this conversation. George, what are you hearing? How is it redefining this whole relationship? What are your customers telling you? I'm going to ask Richard about open banking, but if you want to chime in there as well, that'd be great.
Yeah, I mean, I probably have less of a view on the technology. As you said, it's changing so fast. The way we tend to think of it simply is, it's an intelligent shopping assistant aggregator. At the end of the day, these things are algorithm-based. They take inputs and outputs, so they're going to be some rule-based decisions as to which pizza is the best pizza, right? And I guess there will be factors like price, NPS or quality, and so on and so forth. So us as a kind of embedded finance or banking as a service provider, we feel that we're going to be one of the criteria, one of the kind of the elements that retailers are going to use to differentiate, right? So if you have a really cool, convenient way to pay, or it's cheap or fast and so on, the agent will clearly put you at the top of the list, right? And at the end of the day, these retailers and brands will want to be on the top of the agent's list because at the end of the day, the consumer will be like, which pizza should I get? That's the number one. I click the button, right?
So it's the relationship is based around convenience and experience as opposed to historical brand loyalties. Is that what we're now saying?
Yeah, and just one final point, it's still up for gaming, right? Because at the end of the day, the agent will still, have a way to be optimized. So, there'll be an element of figuring out which parameters or which criteria do you want to go long on, so you are at the top of the list and get selected.
You're nodding, Eamon.
Yeah, I think there's a couple of things there. So I think there's been a lot of talk about the loss of brand loyalty, but I think from a merchant's perspective, from a retailer's perspective, you have to be ready for the different worlds of agentic. So we'll have our loyal customers that will only ever order pizza from Papa John's. So how do we make it as easy as possible for their agent to order pizza from us? And then you have the transient customers who, like you said, Phil, will go, well, I want the best deal on pizza. Who do I get that from? And how do we optimize to be at the top of results for that from a price perspective, from a quality perspective, from NPS, from Google ratings, whatever it might be. And then there's the people who have never ordered from us and not necessarily ordered from our competition. And how do we optimize to say, someone who says, order me a pizza, how do we end up at the top of their list? So it doesn't necessarily erode brand loyalty. It gives you some opportunities to create some new loyal fans, and you can optimize for loyalty as well. So.
And I'm curious, what are you doing to optimize for that loyalty? How are you managing? Because it is the relationship, which is the key here, is around loyalty and trust from the brand is changing. So what are you doing, today, this afternoon?
Yeah, it's a really good question. So a lot of it at the moment is planning. So we're planning two things in parallel. One is our tech strategy for agentic ordering and what MCPs do we need in place and how do we build the tech for next year and beyond. And the other bit is the marketing strategy and how do we put our key messages front and center. Those two things have to go hand in hand to be able to get these LLMs, these agents to index us in the right way. And that goes well beyond kind of SEO, as was mentioned earlier.
It's fascinating. Richard, open banking, what part do we have to play in this brave new world?
So I think it is, the world is getting more complex. And I think from a payments perspective, it's like plumbing. You just have to be connected, because if one bit of the pipe isn't connected, it's not pleasant. So actually, from an open banking perspective, it's competing against other payment methods. So you just need to ensure that you're connected to the various different building blocks and optimize those connections for those building blocks so that the right services can be packaged together so you actually deliver the right value exchange for the customer.
I see Phil nodding. Please jump in.
Yeah, I think the most painful world, and Richard talked about it at the start, is that subscription world. It's that world of car insurance, renewals and things. And that's where we massively could see CVRP interrupting the world or making its mark on the world. Because, for example, in a grocery world, generally a customer's basket's about 60 items. Now that's 60 items that a customer's gone through. They've had to add 60 times to a basket. They've had to shop like milk, bread, all the above.
But you do put it in my favourites because I shop for you.
We then put it in your favourites to make it easier for you,
yeah.
but that's capped at 60.
Is it?
Currently. And so you're shopping quite a regular way. So it's generally about the same price. It's generally about the same value, going to the same house. So we've looked at things like exemptions. We've looked at things like tolerance levels to ease that. But it's still a card payment that isn't really meant to be a card payment. So groceries, the amount you'll get charged will be at the end of when we picked it. It might be a different value to the value you've put in at the start. I think this is where there's going to be disruption. I think in the utility company world, in the telco world, in the subscription models, that's where open banking gives you quite a viable, quick and easy way to solve a customer need.
Richard, please.
I think if I think around VRPs or CVRPs, whatever acronym we're currently using, I think there's a trade-off here around making sure that we make it seamless and easy to plug in to deliver a great customer experience, but ensure that the customer has the appropriate level of control. And I think that's where VRPs do quite well, because on direct debits, I go, I'll give you access to my bank account. You can take whatever you like, because you can, as long as you tell me about it. And if I'm not happy and you've done it wrong, I can get all my money back. So it's quite a crude solution to the challenge. But it was the right solution for the capabilities that existed at the time. On cards, I don't really know if I've got a subscription or not. It's quite hard for me to tell. How do I, on my checkout experience, know if I've signed up to Continuous Payment Authority or whether they're just holding on my card details and they're going to do a quick checkout later on? I don't really know that one, so I've sort of given some credentials out and they're going to get used. With VRPs, I'm also giving some credentials out, but at least I'm setting some parameters around that. So it's almost, I'm giving you an envelope of permission to pay in. Now the question is, can we make that work? And does that deliver the right experience for everybody on the chain? It's got to be right for consumers, and it's also got to be right for the merchants who want to deliver the right things to their customers at the right time. But it should have some components that help us deliver a better solution for the subscription economy going forwards. At least that's the hope.
A better solution for the subscription economy going forwards. I think you're absolutely right there. But are your customers, if we're embedded finance, George, telling you the same? Do you what would be your comment on everything you've just heard on this section?
Well, I mean, clearly we have great experts on the panel. At the end of the day, consumers don't care how, the payment method or the technology or the connectors or the plumbing. They just want the convenience and the kind of the speed. So it's about making it easy for them. And I think in this agentic world, the embedded finance providers, will be almost, as I think, like a trusted enabler for agents, right? So agents will look at us and say, okay, is this payment mechanism or is this provider trusted? Do they have a track record? I talked about operational excellence before. What's their conduct track record? Clearly with loans, it might be slightly different. As long as you get the money and you buy it, you care less. But let's say we get into kind of pots or savings, that's when consumers care more about, well, who's holding my money? What's going to happen to it? Is it FSCS protected? So, the agents are going to look at these parameters and make recommendations.
A trusted enabler. That's another key takeaway. Eamon, just as we wrap up agentic AI, because I do have one final question, I'd love your comments on everything that you've heard so far.
Yeah, I think it's really interesting. I think the sense I'm getting is that no one really knows what it's going to look like. We're all kind of speculating and trying to prepare for it, but when it actually happens, no one knows what it really is going to look like. The other thing I think I'm hearing is that I need to start offering pizzas on subscriptions.
I think that would be a game changer. So that, which is a beautiful segue as we begin to wrap up. What I would like is everybody on the panel to do a bit of future forward looking, okay? So before we take some questions, so please, that's a bit of a cue. You've got a couple of minutes to get your questions ready. Phil, what are we going to be talking about this time next year, assuming we all get asked back again? I think we've done a terrific job, so we might do.
So it's very hard not to say agentic, but I think it's a guaranteed. It's on the list. I think the other one I think is probably going to be fraud, bots, attacks, and where I think you were talking earlier about liability shifts and where liabilities sit. I think the more we get new channels like TikTok, like Instagram, and then the more we get new channels like LLMs and chatbots, the more we're going to be having these conversations about where do fraudsters intercept those, where does liability sit, who's responsible for the fraud or not. So I expect fraud to become a bigger and bigger topic alongside it.
Interesting. It truly is, and thank you for the plug. Richard?
I think I'm going to go down the subscription. I agree. I think fraud's going to be vitally important because commerce is getting more complicated. And as soon as we introduce new channels, you introduce new vectors to be attacked. And therefore, we have to develop more of the, use the technology and the capabilities to grow that. But on a more positive note, I hope we're talking about subscriptions and sort of the change and the loyalty to brands. Because, of course, we're going to have agentic commerce. But I actually quite like the idea of more and embedding brand loyalty. and I'm hoping to get a discount on your pizza subscription. Is what I'm really going for.
I want the shoes.
So, Mr. Papajohn, Eamon, what are we going to be talking about next year?
I'm probably going to lower the tone here, but I think legislation is going to be a really big part of what we talk about next year. We're either going to be sat here criticising any legislation that has been passed, or we're going to be sat here shouting about what legislation we need to protect against fraud and all of these things in an AI world. So,
Particularly with AI.
yeah, absolutely.
Yeah, okay. I think everybody in the room would want more protection, which is what I was talking about this morning. George, what are we going to be talking about this time next year?
Probably have two. One link to your comment, buy now, pay later legislation that will be enforced next year. How are retailers dealing with that? What's the impact on demand? Can you buy pizza with buy now, pay later, or should you? And the other one, I think the growing importance of digital wallets when it comes to payments. I do think a larger percentage of e-commerce will be going through digital wallet type solutions as retailers try to kind of promote loyalty and benefits. So that's something we're going to talk about.
And you heard this morning, I think as we scale in an AI world, in this amazing land of opportunity with smart data, we do need to be clear-eyed and we do need to build our defences as we scale. You have got an amazing panel of experts. We've got time just for one question. Who's going to put up a hand and ask them a question? Well, thank you. I think there's a mic, a shout. Yeah, go for it.
Yeah, thank you. I was just going to ask.
Thank you.
The open banking piece, 4.5% share of checkout is very, very strong. Did you do anything to promote that particular solution, or was it just all natural to get that share of checkout?
Yeah, that's all natural. And that was intentionally done. We just wanted to see what would happen, and it got to that level kind of on its own. The two next steps for us is one, to implement it on app, where we think that percentage is going to be even higher because it's a more seamless experience. And the second thing is to incentivize it. So, as I said earlier, there's business benefit to customers using open banking because it's cheaper for us. So what do we do? Do we offer points? Do we offer freebies? How do we get customers using it? And again, it'll be interesting to see what techniques work to incentivize people to use it versus, and especially want to take share away from, card payments where they've got all their details saved in either their wallet or in their browser, away from Apple Pay and Google Pay, which they use everywhere and is really seamless. So yeah, it'd be interesting to see what that looks like.
Ladies and gentlemen, your panel have worked very, very hard. They're a panel of absolute experts. You will have a chance to talk to them and ask them questions over lunch. But for now, will you put your hands together and give them a really rousing, because they did well over that banging as well. Phil, Richard, Eamon and George, please. Thank you very, very much.
Thank you.